The other thing we can do with put options is we can sell puts against them. Just like we do with the covered calls, where we go in, we buy long-dated exposure, and then we sell covered calls against it. You can do the same thing with put options. So if you bought put options on a stock like an Apache, and we did, can anybody see why? It'll show up here in a minute. There it is. How about now? Anybody see why? It's a bearish trending stock, is it not? It's been trending bearish. It's been putting in lower lows and lower highs consistently off of the moving averages. And on retracements like this, instead of panicking and getting out, we use them as money-making opportunities. We'll go sell an out-of-the-money put against the put that we own. It's a diagonal calendar spread. So we go in and we sell a put option against our long put option that we own. So we'll go in. It's just the opposite of a call spread, right? This is just, we've got a stock, ABC stock trading at 123. They trade there a lot. Stock looks like it's going to go lower, so we go in and we buy to open the, well, let's just say, if we find some stocks that are in bearish trends, now the market's not yet, but if we find some stocks that are in bearish trends, it makes sense that we go in and we start to trade those, and we might buy to open, for example, the 120 put option that expires in January 2016. That option might cost us $4, okay? We're buying a put. We think that the stock's probably going to go what direction? Down, okay? And as is occasionally the case, we're right. It does go down. And then it does this. Well, is that unusual? Is that abnormal behavior for the markets at all? No. We know from what Mark Hay teaches and that we see in the charts, stocks and markets tend to go in the direction of a trend for how long? 3 to 5 days. And then retrace against that trend for 1 to 3 days. Is it always 1 to 3 days? No, sometimes it's 4. Is it always 3 to 5 days? No, sometimes it's 2. Sometimes it's 11. But generally speaking, if you will look at a trend, the structure of a trend is 3 to 5 days in the direction of the trend, 1 to 3 days counter trend move. On those counter trend moves, as the stock's going up, we're going to be losing some money on this put, aren't we? Stock's going up, put option is going to go down a little bit in value, but there are weekly put options on these stocks as well, are there not? Could we come in and sell to open the 120 put option for 30 cents on this stock that expires in 2 days? Could we do that? What's going to happen to the value of this put option as the stock goes up? It goes down. So for 1 to 3 days, the stock retraces, it goes higher, and we get to expiration. The option expires worthless, or we buy it back for nothing, or we buy it back for less, and we make 30 cents that week. Is that okay? I mean, 30 cents on 10 contracts is going to be what, 300 bucks? That's not too bad. I mean, that's weekly income that I didn't have to work for. I didn't have to build a house. I didn't have to, fix a car. I didn't have to sit in a cubicle. I can do whatever I want to do, make that 30 cents that week. That's spending money. That's cash that I can use for whatever I need to do. Oh, by the way, if the stock after this position expires, right, so we take this position, it expires, we no longer have any exposure to it, the stock retraces as we expect for 1 to 3 days, and then it does this. What's happening now to this position? Now it's going up in value. We wait for the next retracement. As the stock retraces for 1 to 3 days, what do? We sell an out-of-the-money put option. Well, we can't sell the 120 put because it's now in the money. So we would go sell the out-of-the-money put option. So in this case, we might sell to open the 117 put, bring in our 20, 30 cents, whatever we're bringing in for the week. And then if the stock goes up for 1 to 3 days, the value of that option goes down. As long as the stock closes above 117 for the week, we get to keep the 30 cents. We made $300 again on 10 contracts. Once that is gone, disappears, If the stock continues the trend and goes lower, what's happening to this option again? You guys understanding how this works? I know, it's boring stuff, isn't it? I mean, it's boring. These trades, they bore me to death. I mean, the whole reason I come in and sell put options against them is because I'm like, I can't just sit around and let this one make money. What am I going to do? I'm staring at the screen. Nothing happening, right? I mean, but over time, what happens is you're building up a massive profit in this position, and you're making money on these positions too. It's like you're making money and you're making money. It's like you're a money magnet. Yeah, I'm awesome. I love that. That is exactly right.